It is July 8th, 2026, 8:01 p.m. Central Standard Time. How you doing, John?
What's up, Jack?
Not much. I am, well, as the title of the thumbnail implies, wondering myself whether or not AI is a bubble or just an ever increasing total addressable market.
Yeah. Um, I was 100% of the opinion that it was not a bubble, but then I started thinking, well, OpenAI, which owns ChatGPT, loses money. It costs them more money to answer your question than they charge you to ask it. And that's where people pay. I don't even pay money. I just use it for free. I just use a free shitbox version. I don't mess with it too much. But um like it costs like $1.50 or $2.50 or something like that to answer one query, but they're only charging people like $30 a month, and they get like way more questions than that.
Subsidized token model.
Yeah, exactly. So like they're not making money; they're losing money. They take in like 15 billion or whatever they're taking in revenue per quarter, but then they're spending like 30 billion. Like and and that's not just ChatGPT OpenAI. Um that's also Anthropic, Claude, that loses money, even though that's the number one AI, and that loses money too. And then Grok, Elon Musk, that shit's losing money. Grok is losing money. Um, and plus, the Chinese have several open source models that anybody can use for free.
You just got to give the Chinese your data.
Right. Well, no, they have some token models too, I think, but like the Chinese stuff goes for like 15 cents to answer a question is the cost, or 13 cents, something like that. And it's not as good as Claude or ChatGPT or even Grok, but it's like pretty good and will be as good as those other ones are now in 6 months or a year or whatever. And it's like 10 times cheaper. So like, I mean, the hope would be that they start monetizing it better in the future. They start charging more money, or people use it more or whatever, um, so they can make a profit, but they're not making profit yet. So, considering they're not making profit yet, those are the main people buying, like Sam Altman at OpenAI. He's the one buying all the data centers. They're trying to train. They're trying to train ChatGPT on it. Like they're creating ChatGPT on it,
Mm-hmm.
and and that they need like as much GPUs as they can get their hands on. That's like the mothership. It's like the central brain of ChatGPT is like a bunch of giant data centers, and they want to make it as powerful as they can.
So where are you getting that it costs OpenAI that amount of money
Uh,
for?
some video on YouTube that I did not fact check or
All
verify
right,
in any way whatsoever.
all right, the only reason I ask is just because I was like, I've heard that number too. Like I've heard
It's
that
probably
thrown
the
about.
number. It's kind
But
of, I mean, we could look. You could look it up.
so
We could look
so
it up
I
right
just
now.
asked I just asked Google, right? I asked
Mm-hmm.
Gemini,
Right.
what's the average cost, because they were, I was like, well, it can vary wildly, right,
I'm
depending
not
on
sure if
what.
Gemini is losing money. It
I'm not
might.
asking Gemini about Gemini. I'm asking Gemini about OpenAI,
Right. What did it say?
and it says that the each individual query can be wildly different in the amount of money that it costs for that query to be run. So, if you're asking it to model out a physics problem, for example, that's going to be really expensive. But if you're like, hey, where are some good restaurants that are highly rated in this area? Like that barely costs anything. So it
Okay.
just depends on what you mean. So I said, well, okay, cool. I appreciate that. Can you just average that all out and give me a number per query? And the internal average cost to OpenAI for a standard chat GPT query is roughly $0.01 to $0.04.
That's cheap, 1 to 4 cents.
Yeah. It says, while OpenAI does not publicly publish its exact average margin per request, industry analysts and token pricing breakdowns establish this baseline by factoring in computing power, electricity, and hardware depreciation per LinkedIn article.
Right.
So,
So yeah,
anyways, yeah, I
I
mean,
don't I
it
don't know
doesn't add
how
up
it's
to a
gonna
dollar
go.
fifty, but
I feel like that's the choke point though, right? Like if the AI is not profitable, people aren't gonna run it. And I heard that like a lot of businesses that use AI aren't really profiting off of it anyway. Like projects don't get done any faster because there's so many mistakes in it. They have to go back and fix all the mistakes, and that takes time. And that they're paying their employee a certain salary, but then they have the employee using AI to write code all day long, and they're racking up tokens, and they're racking up $100,000 of tokens in 1 month
yeah, I've heard that too.
for one employee who was told to use AI more, so he did because they already company already prepaid for a bunch of AI tokens, and they want them to get used. They want to win the race. Like every company feels like they're in a race against every other company in their category in every possible way. So everyone's just like turbo cheating on writing their code as fast as they can with AI. I don't know, man. Like, I mean, at first I was like, okay, Apple, not Apple, but Google, Microsoft, Amazon, Facebook, like those companies were buying, um, data centers because they're trying to make their own large language models,
Right.
and that costs money. Like making these large language models costs money,
Yeah,
and they're spending money.
I think that all the what I from what I understand, like all of the like exorbitantly high amounts of money spent on AI are from enterprise accounts.
Yeah,
You know what I mean? Like large corporations that are using, a lot of these AI things, and it's because they're integrating uh, the artificial intelligence into their systems. So they're paying these big setup fees to like integrate
yeah,
these two different computer models together, and it costs a lot of money. And I think that that's where a lot of the spend on AI is
yeah,
that those kind of upfront costs.
yeah. Building the data centers.
Well, not the
That's why.
data centers. No, no, no. I'm
No,
talking about like Patterson Company is
yeah,
going to bring in
like a software
Anthropic,
integration.
and they're going to say, "Hey, we want to integrate Anthropic's, LLMs or whatever software stack into our in-house system that we already have. And we want to keep the data proprietary, and we don't want to let it get out into your larger model, and that whole thing." And so
Oh, I
they're
see.
like,
They want a custom AI.
yeah, so then they're like, okay, cool. Well, we'll plug you into the Anthropic machine, and we'll get you set up on a token, deal, or however you want to do it, right? Like you can pay us a monthly fee, or you can, but either way, there's going to be an upfront, setup cost of about $1.2 million. So I hope you're ready for that check, that
Probably more.
type of.
A
Well,
lot of.
whatever. Yeah, you get the point that I'm trying to make, though.
Yeah, of course.
And I think that that's where a lot of the AI, like that's where a lot of the like that's not something that you and I are ever going to worry about, really. I mean, not in our, I mean,
You're saying this is where the money is going to come from, is all these
right.
businesses who want their own
That's
custom AI.
it's already where it's coming from is what I'm trying to say. Like
Oh,
that's
okay.
they're not making any money off of you and me buying a subscription, right? Like neither one of
Right,
us are doing it, first of all.
right.
Second of all, even the retail, schmoes that are they're buying the $20 a month.
Like Pete's doing that.
Yeah, like and I'm sure that they're great and they're actually, I
Yeah,
mean,
he's probably.
especially Pete is
I
really
bet you
able to
Pete's
use it.
using like 10 times more tokens than he's paying for. at least.
Here's, I mean, I have my own personal thoughts on this.
He
Like
uses AI constantly. He uses it for investing. He uses it for all kinds of stuff.
I use it at work every day.
Nice.
And I don't, we don't pay for a subscription. I just use the free model and I use it all day, every day, and I've never like had it be like, "Oh, sorry, like we can't process your request."
Wow. You
Like
which one do you use? ChatGPT?
I use ChatGPT, I use Microsoft Copilot, I use Claude sometimes. I don't use Grok just because Grok has always kind of seemed snotty to me.
Yeah, it's pretty. It's the shittiest one.
And so
One
I just kind of
of that
like
group.
its personality bothered me.
Yeah, for sure. It's very snarky.
But, it's got the real-time integration to Twitter, so there's some super cool stuff that it has that nobody else does.
Yeah, recent information,
Hmm. So, anyways, there's pluses and minuses to all of them, but like
like current events.
my personal suspicion, dude, is that if you are somebody who is interested, like in an interesting way, using AI right now, like it's built into the model to not worry about tokens. Like if you're doing something that it finds interesting or that like the
That it can
company
learn from.
that maybe it can learn from or like glean some information
Yeah,
off of,
they just let you go for
they
free.
just yeah, they just let you keep asking your queries because I ask questions to this thing literally hundreds of questions a day. And I've
Yeah,
never once run unless I'm starting to generate a bunch of images or feed it images, then I start to run into like, okay, you can't feed me any more images anymore.
right,
But you know what? That's only been on my like personal account on my phone.
right.
Like the one at work, dude, just constantly runs. Like nothing ever like, there's never any slowdown or anything like that. Like I just keep using it all day.
Yeah, I mean, there's that. I mean, this is the case for yeah. AI is just gonna keep growing.
Yeah, I mean I still so
Like Bubble's not done yet. Bubble's got lots of room to run.
yeah, I mean maybe it might. And like that's where I go back and forth in my own mind, right? Like between like, well, look at all this upside that is there. Like we can kind of see it. But like there's also in my mind, like I lived through the dot-com bubble burst just like you did. Like we were kind of in our,
Yeah, we're in our
formative
early
young
20s.
adult years, yeah. And like this really does feel a lot like it. Like it does kind
Yeah,
of remind me of the hype and everybody's so excited about like how revolutionary it's going to be.
yeah,
And everybody kind of is like, yeah, like we can all see that it will be. And it was like the internet was revolutionary. Like building the apps on top of the network was revolutionary. Like all of that stuff really was everything that everybody thought it was going to be and more. But that doesn't mean that it wasn't a bubble. It doesn't mean that it didn't pop.
Jack, pull up the Amazon chart. It's the best fucking
Oh shit.
chart. The Amazon chart. I should have had you do it. I didn't even think of it. It's the best chart in the whole world.
The whole world,
The
huh?
whole world. There is no better chart than the Amazon chart.
Not better than Amazon. All right,
It's
give me just a
literally the
second.
best chart on TradingView. It's just AMZN. Now, it's not a company I invest in, but
I am exposed through
like it's fine. Yeah, like it's fine. Like, and even if 100% of my money was invested in Amazon, like I'd still do fine. In fact, I'd probably
yeah.
outperform. I'd probably outperform myself.
Yeah,
Like, look at
I
Amazon. Like, it's got a beautiful chart,
hmm.
right? Like, being all you're in logarithmic, right? Yeah, yeah. Okay, measure
I'll be
start
right
with
back. I gotta. I was in the middle of something. I'm still listening, but I can't manipulate the chart.
oh no, it's chart time, bro.
Well, hold on just one second
All
then.
right.
In the meantime, tell me why it's so awesome.
Because there's so many huge drops in this chart. Like Amazon pulled back over 90% like three times. Like, but at the same, like it was totally never a bad time to buy Amazon. Like just buy it, hold on to it. If it goes
Hmm.
down, buy more. You get it on sale. Like
Right.
it just goes up only for the whole rest of the chart. I can't see the years on. Okay, I got zoomed in. So there's a giant crash in 2001, 2002, and then might have even started in 2000. I can't tell. And then there's a few more crashes
I
after
know.
that, which look small on the chart, but those are big. If you use your measuring stick, there's still big crashes.
Right.
There's even a big crash in what is that? Move the mouse away
I am
from
sorry.
to the. Oh,
Okay,
you can't.
I'm here now. I'm back.
Just move the mouse all the way to the right. It says off the chart. This is not blocking anything. Okay. 2020 is that the big crash?
Right here.
Right after that, there's a big crash.
That's 2022,
That's the
October,
bottom. Okay, so that's 2022 crash.
December 22,
Which was a
October.
big
Yeah.
crash. Nobody even talked about it. That was a pretty big crash. And look at that
Mhm.
crash.
Yeah,
That was a pretty big fucking crash in 2022. Like
sure
people
was.
don't even talk about, it, but that was like the correction from COVID that got delayed from all the money printing.
Yeah, it looks like it.
That was, and then they finally let it crash a little bit, but now it's been back on a rampage ever since 2022.
Hmm.
It's been on a 4-year rampage. So measure that drop. Measure that 2022 drop from the top wick. Even not even the wick. It's 54%, 57%. Right? Like that's a brutal drop.
Hmm.
That was just in 2022. Is Amazon any less of a like big deal? No. Like things can crash more than 50%, and people don't even notice it. Did you ever notice anyone panicking about Amazon?
No, nobody panicked about
No,
Amazon
nobody cared.
because
That's
Amazon was doing this before.
that's normal. So like my AI stock's down 25%. Should I be freaking out? Not really. Measure some of these crashes. Measure that big bad boy right at the start. That's a wicked crash right there. What is that? 94%. So we've gone through that with
It's
Solana,
not even the full crash. I missed the top thing
right?
there too.
Solana crashed like 90, 94, 95, 96%, somewhere on there.
Hmm.
So like, but then look, there's a little crash right after it, a little tiny one. Yeah, right there.
Right, this one.
Yeah, I don't know how to measure that. See what that is. It might not be much, but just in case. Logarithmic's tricky sometimes. Sometimes things that look like a blip on the radar are still big crashes. Yeah, it's just that little tiny bit was 46%.
Hmm.
And go a little bit to the left. There's a crash right before that, and you could even make it a whole big crash. No, to the left, to the left.
Oh, this
Wait,
one.
yeah, the top wick right there. No, not that one. We already did that one. Right?
What, this one?
Yeah. Measure that to the endpoint that you had before. 57%. Like, and then there's a sharp one, like
Hmm.
a few months after that.
Why is it that I can't keep this on the page and start a new one? Do I
That's
have
just
to
the way.
just?
That's just the way it works. Don't worry about it. That's
No,
fine.
I've seen Ben Cowan do it,
Yeah, well,
so I
he's
know it's
also
possible.
a PhD nuclear engineer. All right, he does things better than us. 66%. Right. So I mean, but and then what year was that?
That was October through, whoops, October '07 through September '09.
Okay, so that was the great financial crisis of 2008, the
Mm,
mortgage crisis, right?
hmm.
Like Amazon has all these crashes, right? All these huge crashes, 50, 60, 90%, 94%. But does that mean at any time back then was a bad time to buy Amazon? No. Like um just because the price of the stock is volatile doesn't mean it's a bad company or a bad investment. Now, timing matters. Like if you buy Amazon at the top or at the bottom of that big huge thing, like that makes a big difference in what your returns are. Like measure from the bottom of that crash to now. How many thousands of percent is that?
From this one year.
Yeah. From that to 2026. If your computer can handle it. There you go. What's that say? 97,000%.
97,612%.
Okay. Now I have to. I can't even like wrap my head around what the hell that means. 79,000. So 1,000% is a 10x. So 10,000% is 100x. So 79 would be a 7,900x. Is that right?
That sounds about right. You're better at math.
Hold on. 10,000 is 1,000 is a 10x. 10,000 is a 100x.
So 790x or 970x.
So 100,000, 10,000 is 10,000 is 100x. So it's 1,000x. So
A little
it's
less
close
than.
to 1,000x.
Okay.
That's close to, so if you invested $1,000, you'd have $1,000,000. Does that make sense?
Say that again.
If you invested $1,000, you'd now have $1,000,000.
Got it.
Now do it from the top before.
This one?
Yeah. Let's see what $1,000 would be.
A mere 5,000,
5,000%.
5,000%.
So 5,000% is 1,000%. So that's a 50x. So you'd have $50,000. That's the difference between $50,000 and $1,000,000.
Mm-hmm.
So it makes a difference. And the best thing is to, if you're holding, if you bought the top, like, oh well, like, just buy more at the bottom
Right.
and you'll be fine. Like, you're still making money. Oh, you only made a 50x, like, boo hoo. But when you bought more, now you made the full 1,000x off of the bottom. That's why buying the bottom is so crucial. That's why I pay attention in the bear market to Bitcoin, because I'm trying to buy the bottom, because you can make a lot of money doing that.
Yep.
Um, so are we at a bottom in AI? No, Jack, we're not at a bottom. Everything's been going up. Like, let's look at some AI charts.
Okay. How about SNDK?
Yeah, that's a really good one.
Oh.
Yeah. This is the best chart. This chart is so funny. It just goes up only. How many percent is that? Measure the percent.
Only 8,000.
Okay, so that's 80x. So if you put in $1,000 at the start, you'd have 80,000 now,
Mm-hmm.
right? So put it on what time frame is this? Monthly?
Yep.
Put it on the weekly. See if we see anything. So the
Uh,
question is that monthly topped out, or is it going to? We don't have the RSI on. RSI would come in handy here. But look at the weekly.
sorry, it made
Like,
my computer freeze when I tried to
that's all
switch.
right. See if you can make it a little bit wider, so you can see the candles better. Yeah. Okay. So it's riding. It's an EMA 12 rider, but it wicked below the EMA 12. Like, it's been holding the EMA 12 forever. You see that?
Mm-hmm.
Like, it's been hold the whole time since September of 2025. It's been holding the EMA 12. That's that yellow line on top. But all of a sudden now it just wicked below it. It didn't even wick. Did it wick below it before?
I mean,
Like, kind of.
a long time ago it got
That's
down.
it. Didn't even gain. It didn't have it until right till didn't have it until farther to the right. No, move right, move right.
Isn't this where it started right there?
No, no, no.
The
Well, that's
EMA
where
12?
SNDK started, but the EMA 12,
No,
right? But
this is
it's
the
above
EMA
the
12
EMA.
right here.
Yes, but it's been above the EMA 12. You have to go a little bit farther to
Yeah,
the right.
right here is where
Yeah,
it gets above the EMA
but then
12, then it
it
comes
dropped
back
below,
down, it goes underneath it. Yeah.
and then it hasn't been below it since.
No, but it has
That's my
gone there.
point. Like, it's gone way the hell up. It's been above it the whole time. See, even right there, it got close, but it kept going. And there, it even touched it. See, it touched it, but didn't go below it. Didn't even wick below it right there. And then there's a wick. That wick might have gone below it. There's one wick that might have just barely gone below it. Yeah, that one right there.
This candle body was below it.
Not the middle. It was a low 517. What was the line at?
I mean, it would have been inside the
It was
candle
on
body.
it. Yeah, it was like, I mean, it was there, but the other wick is below it. You can see that. So it's wicks below it before. So now where are we at on top? Like, we just wicked below it on the current candle.
Hmm.
So now this could bounce, right?
Well, it looks like
Oh,
it's already retraced.
go to the auto on, or go to the RSI on the bottom and hit A on the bottom right, to the right, farther to the
A.
right. Yeah, all the way to the right. Just mouse over to the right a little bit farther. You're almost there. Like, one more inch. Not on that number though.
That usually.
There, yeah, they hit that. There you go. Okay, so the RSI was topped out for a long time. since April. Look at the RSI, dude. It's like finally cooling off a little bit. So what I'm wondering is it done cooling off? Let's look at the top. Is it done cooling off, or is it going to cool off more? Is it going to go up from here? Was this the top? Like, what's going on?
Sorry, what did you want me to do?
Yeah, go to the top of the parabola there. I mean, it's curling over hard, but if that EMA 12 holds, we'll be all right. Let's go to the daily. This is a weekly chart. Let's go to the daily candles. Okay, yeah, look at that. We're on the 50 in the daily. That's got to hold, right? But look at the RSI. What's the RSI at? It looks like it bottomed out. No, it didn't go that far down though.
Yeah, it's still within the.
It's got room to go down. That's the scary part. But we just wicked below the 50,
Oh, you
and the next
closed. You
candle,
closed beneath.
we opened beneath the 50. It opened beneath 50, but then it went above it. Like there's not much acceptance below the 50 yet.
Dude, there
But
is a candle body that like a this.
yeah, I know it's scary, bro. Because like it was holding before. It was holding the EMA 26. Do you see how it's holding the daily EMA 26? It was holding it for a long time, and then now it blew past 26 and the 50. It's like barely hanging on to the 50. Like that's a warning sign.
Yeah, that's a close beneath the 50.
But if it keeps going up, if it goes back up to a daily uptrend, it'll be fine. But if it goes down more from here, then that's going to start changing the weekly chart. Go back to the weekly chart. Yeah, like you don't. I mean, it could go down a little bit, still hold the 12. We want that. We want this current weekly candle to close above the EMA 12. What is that? 1512, 1612. It says on the right
1611.
side, the yellow. See how it says 1612?
Yeah.
It's in yellow.
Hmm.
That's for the EMA 12.
Yeah.
It's at
Um.
1612 right now,
Mhm.
and we're at 1726. So as long as it holds 1612, I think it'll be fine. But that's asking a lot. Like we're not very far from 1612. It could easily dip down. So that's some of the technicals. I mean, it seems like it's at a spot where it could go either way.
Sure.
We gotta wait a few days and maybe even a few weeks to really see what's going on. I'm not very comfortable. I would have rather sold. Um, is this how many candles are we looking at right now weekly? Looks like I should have sold about 2 or 3 weeks ago. That would have been better. Like, and look how big of a drop that was too. Measure that drop. That was a big drop. What is that? 38%? 37%? Yeah, 37%. That's a big drop, bro. That's more than a third. And especially if it's gone up so much, it's a big position now. You know what I mean? Like, so like, are we in a bubble? Like, kind of. Like, I don't know, but like, does it all like? And that's the thing. It can be both. It can be a bubble, and we have room to run. It's a bubble, meaning it's going to crash right now. It's already crashed 37%. That's a huge fucking crash. It could easily crash down 50%, 75%, no problem. And yeah, I mean, it could crash. Look at Amazon. Could crash 94%. Amazon crashed 94%. And it had to start just like SNDK, where it just went straight up for a while, and then it just had a 94% crash. And then it went straight up for 20 years straight. And we can look at the fundamentals of SNDK. Like SNDK makes flash memory, which is important for AI. Look at their financials, dude. Go to so that was technical analysis. Let's do some fundamental analysis. Yeah, go to the bottom right. Yeah, scroll down and then hit that arrow down, and then okay, keep scrolling. More info. That's the button I was looking for. The more info button. Because then yeah, now we get the full screen. Good stuff. Okay, on the top, go to like overview on the top left. And SMDK just makes memory. Like these guys, like these are the guys catching the money when those businesses, Jack, with those businesses you're talking about spending money, they're spending that money to OpenAI or to Anthropic, and then Anthropic and OpenAI, they spend that money to SNDK, to SanDisk. They give the money to SNDK because they need to buy more memory, right? Does that make sense? So the business clients that want to use AI and want to integrate it with their software, and they're the ones spending the money, right? And they give their money to OpenAI or they give their money to Anthropic or Microsoft to build their shit, right? Well, those companies need more data centers and they need more GPUs and they need more memory for their AI, right? Anthropic and OpenAI and Google and Microsoft, they're buying memory, correct? They are. It's like the biggest bottleneck in AI right now. And as well, right. Well, we don't have to worry about that. We can just look at SNDK. As long as SNDK is raking in cash, everything's fine. And that's what I'm trying to look at right now. I want you to press the overview button in the upper left corner of the page. Perfect. All right. Oh, this looks different than my phone. Okay, so debt 207. Is that billion or million? Million. 207 million. And they have 3.7 billion in cash. So they like have no debt at all. And they got a bunch of cash. Scroll down. All right, hit quarterly on that growth and profitability chart. So they were losing money. So see how the blue is the revenue, but the green is the earnings, and the orange is the profit margin. So finally, the last like 2 or 3 quarters, they started making money. Well, they broke even for a couple quarters, and then they started making money. Before that, they were losing money. Like they just started making money. How much did they make last quarter? Yeah, it is. They spun out Western Digital. Yes, but they used to be. Yes, but they used. Yes, but they used to be owned by Western Digital. Right, but the stock is new. Right, but they didn't have a separate stock to own SanDisk. You had to own. Right. I'm not worried about the full. I'm just worried about last quarter. All I'm worried about is last quarter because I know they're not in debt, so I don't care what like that's fine. Like I don't need to know that. Like if a company has been losing money, there's two things they have to do. They either have to dilute their shares or they have to take on debt. So the first thing I do is look at their debt. They don't have any debt, so it's no problem. The next thing we can look at share dilution. Scroll back to the top. Next to overview, all the way to the top, and then next to overview, it should say, "Fuck, I'm doing this on my phone, so I can't see." Statements. Click statements, and then scroll down to the bottom. Like the third to the bottom thing is diluted shares outstanding. Click that. It's fourth from the bottom. Diluted shares outstanding. Yeah, click that. Okay, so then that's year. Is that yearly or um? That shows right there. Yeah, no, quarterly. That's quarterly. So the shares went up a little bit, 4% and 7%, but that's when they were like breaking even or losing money. And then most recently is only 0.64%. So it's a little bit of share dilution, but I would expect that considering they used to be losing money. Scroll down now. We can see the annual. Oh, yeah, can you scroll down? I mean, yeah, there you go. That, oh, wait. No, scroll down for a second. Oh, okay. Scroll up then. Yeah, so this is and these are annual candles. So, it only went up 0.69%, right? So, like, the share dilution's not terrible. Like, they had a little bit when they're losing money, but they don't have share dilution anymore. So they have no debt and no share dilution. So then all that matters is, are they making money? So that's why I'm saying, like, yeah, they're now making money. Like they just started making money because there's a supply crunch in memory. And AI, like that's the bottleneck in AI. Like if they want more compute, if they want more data centers, they gotta buy overpriced memory from SanDisk and from Micron and from SK Hynix in Korea and Samsung in Korea. But we don't need to, yeah, for sure. And they're going to flood the market, and that's what always happens with RAM. That's what always happens with Micron and Samsung, and like they make too much RAM when the getting's good. They make too much. They flood the market, so then the price goes down. So they stop making as much money. So they cut their prices, and they make even less money. And their profit margin goes down. And I think it's like a race to the bottom of like zero profit margin. And then they just keep slowing down the supply and making other things that make more money. And then and then this AI, and then something comes along, and there's demand for more RAM, and they're not making much. So then when the demand goes up, and the supply stays the same, prices go up. Once the prices go up, now they're making money again. Now they want to increase the supply, so they increase the supply. It's cyclical, and a lot of companies are like this. This is common. Yeah, and not every company is cyclical, but memory computer memory makers are have been right. And AI, like the argument is that AI might right where there might be so much demand that as they build a factory, they already have an overflow demand and need to build another factory after that, right? Or it's like so much demand. But what I'm saying, but all that shit costs money, and eventually someone's going to run out of money somewhere. Like right now, the spending is being driven by like five of the Magnificent Seven companies, all of them except for Apple and Nvidia. But Nvidia is receiving money, but then it's spending money too, and it's buying other companies, and they're investing in other companies. Nvidia invested in OpenAI, so that OpenAI would have money to buy more GPUs from Nvidia. Yeah, man, and all of and what could easily happen to SanDisk is SanDisk could drop 94%, just like Amazon did, and then it could go on for 20 years up after that. Like while and on the way of those 20 years, it's going to be dropping 57% here, 60% there, multiple times. Like that can easily happen, and those are devastating crashes. But it's still good to just buy the stock. And the cheaper it gets, buy more of it. I don't know. Like it's not financial advice; it's just math, right? Like you'll make more money the lower price point you buy it, and preferably you bought it a long time ago, and then you have the choice. You can just let it ride, or you can take some profits at the top, but then that's a taxable event, so you got to deal with capital gains taxes and like I don't know. It's almost easier to just let it all fucking ride because I don't need the money until I retire. This is like my retirement fund, so I can just let it ride. I mean, that's it. Doesn't like right, and I'm dollar. I'm just like, and that's what I do is I just dollar cost average every week. I get my paycheck. I have some stocks like SanDisk and Micron that I like, and I could show you the whole list. No one cares. I'm just an Uber driver. My list probably sucks, but it's. companies that build things that go into data centers, or companies that even build the physical cement of the data centers. That's Sterling. I got that. I got oh, I can just read off the list. That's not. I'll do that. I'll put you guys. Yeah, probably. I mean, there's a million things to look into. Like these are yeah. I mean, I looked at large cap companies that have low debt, that have high increase in earnings, that don't dilute their shares, that are making money off of this whole AI boom. And it can be producers of electricity, have some solar panel companies, or one solar panel company, one solar tracking rail system company, and one inverter company. Um, I got a couple companies like PWR that do electrical grid stuff, like making more power lines and transformers and stuff. I got VRT Vertiv, which is doing like liquid cooling systems, and the good kind, that the closed closed loop liquid cooling Vertiv. Yeah, that's a good company because they make a lot of money. They have low debt. They 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 have high earnings, profit, a lot of profit. Um, you know, yeah, like these are all companies that are doing well to begin with and are doing even better because of the AI spend. As long as Google and Amazon and Microsoft and Tesla and all these companies keep spending money on AI, then Vertiv and these other companies I mentioned are going to keep collecting that money. And Micron and SanDisk are like DRAM and whatever. I don't remember all the kinds of memory. It doesn't matter. And then there's even Seagate and Western Digital are making money, and they just make hard drives, right? They're making a ton of money because they need the hard drives to store data on for the AI, right? Like that's needed. Like, um, yeah, yeah, like all those, yeah, the solid state hard drives, the hard disk drives, because the hard disk drives are like the cheapest. They're the slowest. Yeah, but those are making money too. Those are making money too. Like AI needs all of it. Like AI needs CPUs, AI needs GPUs. See, at first it was just GPUs, NVIDIA, but now they need CPUs. So AMD makes both and CPUs and GPUs, and now NVIDIA is going to start making CPUs as well. Like everyone just starts making, like, yeah, and Broadcom, right? Like there's all these chip makers. Like SMH is a whole index of chip makers. Like they're all making, yeah, and look at the, yeah. Well, I mean, right. And you can look at that chart for SMH, and you can look at like the individual companies in SMH, right? Yeah, right. So is that a top? I don't fucking know, dude. Like, I mean, it's still going, but like, is that a top? It could be. You could zoom in. I don't know. Like, it looks like it's overextended. It might pull down. It might pull back to the 26 or something, which is what, 264, and it's at 593. So it can pull back 50% and still be in a bull market. Like it just pulled back. I mean, it just pulled back in 2024 and 2022. It says on the right, Jack. On the right side, it already tells you. You don't have to even look. Well, I just did the math on. Oh yeah, right. But what about the 26? 37%. What about at the 50? 58%. And look, it just wicked down to the 50 a few months ago. When was that? Definitely wicked below the 26. Yeah, dude. Well, how much? What's the drop on that from the top to bottom? That was just in 2025, right? 2024? No, the top of the dip in 2024, a little bit earlier. No, a little bit back. There you go. Yeah, up there. Great, great. But I want the maximum percentage that gives the biggest number. It's the show. It's the showiest way to do it. 40%. Not at once. It took a while to grind. All I'm saying is, sure. How much is that? How much is that? How much is the quick one? Right. And a 30% drop. How much would a 30% drop be from right now? But but it'd be I mean, that's a drop, dude. What's the price? Yeah, it's at 593. 593 to 417 is a brutal drop. Right. Like that's reasonable. We could do something like that and we'd still be in a bull market. As long as we had another higher high after that. Well, I don't know, dude. I mean, the real answer is I don't even know. Like we're in a little bit of a pullback. It's just like a little dinky pullback. I don't know. It could turn into a bigger pullback. I don't know. Like I don't know if I should be selling my stocks. I don't even know what to do, man. Yeah, I should probably do that. Yeah. All right, let's call it this. We've been rambling on a lot. Uh, or if it even already has, and then even if it has, it's gonna grow again. Yeah, yeah. I don't know. Rough. I hope nobody watches this episode.